moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving Iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Dawsontire and Will, your premier ag tire and will provider in North America, helping people grow. TractorZoom delivering insights, and Dryshod Boots, the official work boot of the Moving Iron Podcast. Shawn is with Hackett Advisors out of Boca Raton, Florida, and Shawn is gracious enough to come on the podcast here once a week to give his insights, what's happening in the commodity markets and the overall economy as he sees it happening out there. And man, good thing we got Dryshod Boots out here, because there's a lot of bull crap to be trudging through right now with what's going on in the old economy or the old election. So I don't know. I'm rarely am I at a loss of words here, but as I look and see what's going on right now, the markets have fallen faster for less over the course of our relationship here doing this than what we saw here during this election. The last thing I thought I would see would be an explosion in soybeans on the soybean market since election night. So I guess what's your thoughts on this, Shawn?
Well, there's a lot of fear with the election, and the fear really was that one side was going to get control,
right,
and put forth very extreme policies. And what it appears is going to happen is we're going to have a split Congress where no real mandate has been given, and that no extreme policies can really get through, because in order to get an extreme policy, you need to have a comfortable majority in the House and a comfortable majority in the Senate, and neither party is going to have that. So I think the market got really comfortable that what they think can be agreed to, as I think what they think a split Congress will agree to, is a lot more fiscal stimulus, which might include infrastructure spending, and that view has weakened the dollar considerably in the last couple of days, and is viewed as being an inflationary scenario for commodities and ag markets, and so I think the market is saying that that's what they think the next 2 years are going to be about: stimulus, lots of government spending on infrastructure, and they view that as being positive, at least to the markets. One could argue that's not what we should be doing, and it's bad in the long term, but in the short run, the markets like it. They like stimulus, and it weakens the dollar, and ag markets like a weaker dollar. So it seems that's where the market has gotten to. And of course, soybeans had a little more reason for it to go up, because the Chinese continued to buy, and then we saw another big order from Brazil, and then we also saw record shipments of physical inventory leaving our shores of soybeans. So while we got wrapped up in this inflationary scenario, we had this incredible China thing going on with soybeans, and it just took out the old highs. And as you know, corn and wheat were not able to do that, but soybeans just broke out to new highs because of it. So overall, that does paint a continued fairly positive longer-term picture for U.S. ag markets. Doesn't mean it goes up every day, and doesn't mean we won't have a correction, but overall, looks like 2021 could be a good year for ag and for U.S. producers. So
it's shaping up that way, and I hope so. We've had almost 7-8 years here of a downturn with some. Every year there's a saying every year that there's a chance for you to sell your crop as a positive gain, and we've seen those, especially the last couple of years here. We've seen those get up into the mid fours and then kind of fall back off, and then kind of get back up there. And we're on our way back up there now, and especially this time of year, watching these commodity prices, typically during harvest, where you typically hit the lows of that time frame. We're seeing the highs, so. There's some positive things out there, some pretty good tailwinds coming our way, it feels like. All right. I want to talk about cattle for a minute. Cattle has had a hard time getting past that 108 mark, especially when you look at what's going on Is that, I guess, what's your thoughts there? Is that a pretty big resistance point to get through? And once we get through that resistance point, you can see some more upward gains, or what's your thoughts there?
I mean, 108, 110 is a big barrier. Exports are phenomenal, but are exports enough to overcome what probably is going to be sluggish domestic demand? And we think some more animals will become available. Older animals become available to the market after Thanksgiving for December. So there tends to be a seasonal rally here in November heading into Thanksgiving. We're seeing that. We're not sure we're going to break out through that. With all the I'm just looking at like everybody else. These viruses going parabolic again. One has to wonder if some states are going to lock down again. Casey, I'm not saying I support that, but with Biden administration, it could be that there's more of an appetite to have some regional shutdowns again, and that obviously wouldn't be good for the demand for beef. So
right.
It's kind of a mixed bag. I think we had some strong smart money buying near $1, and so we've had a big rally. But I'm not sure. I think we're kind of stuck in a two-sided trade here into the end of the year. That's what I think. Until we can get a clear picture, is this virus escalation going to lead to shutdown 2, or are we just going to fight through it and not do that? And I don't have an answer for you on that. I don't know what's going to happen, but I can see that might happen, at least in certain regions, and that's obviously not going to be what we want to see to keep domestic demand for beef on the up and up. Yeah.
So. No, I think we've struggled enough here with the economy trying to bounce back from the first shutdown we did, and the second shutdown is going to be even worse than what we've seen now.
Well, Europe's already shutting back down.
Yeah, I saw that. Yeah,
so everyone's shutting down over there. Everyone. So, is that are we going to follow suit again? I hope not. But like I said, I know the Biden administration is a little more friendly to some more forceful restrictions, and whether they can force states to do it or not, I don't know. I just don't know. I just know that it's a risk, especially in the beef market. It's a risk. So.
Yeah, I'm afraid that if they do try to shut it down, there'll be some governors and mayors and whatnot of certain areas that are just going to ignore what they do, and which isn't good for anything.
I mean, down here in Florida, DeSantis, is very much on board that he's not going to lock the state of Florida down again. And I'm sure there's other governors that have decided that that's not the route they're going to take because of the consequence to the economy. So that battle will be fought, and it'll be interesting to see how it all plays out. But I agree with you. I think it's going to be a lot more resistance this time than everyone just caving in like they did the first go around. So.
Yep, I totally agree with what you're saying. Totally agree. Let's talk about wheat. So when I'm looking at wheat, you got over $6 in the December contract here. So. To me, when I look at wheat, I see that seems to be more volatility in the wheat market just because of what's going on around the world as far as the weather's been. You got all the key growing areas of the world are in some level of a drought right now, some worse than others. But and I've talked about it before. I pulled up the world drought map and took a look at what's been going on around there, and you look at the Black Sea region, it's pretty well dry. You look at the wheat belt of the U.S., it's pretty well dry. You look at what's going on in Australia, they're kind of hit and miss, but they're more dry than they're not. And so there's a lot of reason for wheat to be climbing, just because of what we see happening in the market and with the weather anyway. And there's got a long winter to come up here to see what kind of winter kill we get and what kind of moisture we get through the winter. But you've talked about it. Other climatologists have talked about it. Other weather folks have talked about it. We're just not going to see the moisture this winter that we would see typically. So the last report I got in Nebraska was if we had a normal amount of moisture come through this winter in Nebraska, we'd still be way, way behind because we're so far behind the scale anyway. So all that being said, wheat looks like something there could be a good shot there to see being a leader on the board compared to a follower.
Yeah, I mean, it's one of our it's one of the markets we think has one of the best upside potentials based upon the fundamentals and the weather outlook that we see. Remember, the world's been hoarding a lot of wheat. They've been hoarding a lot of rice because they're worried about food shortages and the virus ruining food distribution chains. And now, I mean, there's plenty of wheat today, but obviously the market's worried about the shortage that could happen in the summer of this coming season. Mm-hmm. And we're going into dormancy, one of the worst rated crops in the U.S. and one of the worst rated crops in Russia that we've ever seen. And we know that when you go into dormancy with very poor condition, you are extremely vulnerable to winter kill, more than you would normally be. So if we get it would only have to be even a mild winter kill event with this kind of poor condition and poor establishment, and you could really hurt the crops here. So the next what I would consider to be the next big market moving event would be a winter kill threat and/or a winter kill event that actually inflicts serious damage to either Russia or the U.S. and/or both. So, and we think that's likely to happen. That we're at least going to get at least one or two of those kinds of mild winter kill events that's going to compromise the crop even further. And then when we come out of dormancy into a hot, dry spring, we just put the finishing touches on the whole thing, and we just get into a real problem with the wheat market. So, we've been telling our producers, store as much wheat as you can in your bin, sell what you have to pay your bills. But, we just do not believe this is a time to be aggressively selling more than you absolutely have to. We think this is a time to use your physical wheat reserves as a core asset for the farmer, and look for opportunities this spring and summer to sell a price that's going to be more reflective of what we think is going to be a very serious wheat shortage coming up. So,
yeah, it's that's the one I'm paying the closest attention to, just because of what's going on around the world,
and that'll drive corn.
Yeah,
that'll drive because of the substitution factor, and
yep.
It'll drive the whole thing. I mean, real true grain bull markets are driven by wheat and rice, the real ones. You can have bull markets driven by corn, but the real 08 was driven by wheat. 2010, 11, 12 was driven by the wheat market. So when the wheat market's going, that's how you get a full-blown grain bull market to go higher. And so that's the one we're really paying attention to, and we think the setup is there for that to happen, Casey. We really do.
Yeah. So. Yeah, it's looking like that. I mean, there's just, like I said earlier, even in the Black Sea part of the world, the same scenario. If they get normal amount of moisture over the winter, they're still going to be way behind, just because of how dry it was this summer and going in through the fall and the heat and stuff that we've seen, which we've everyone's experienced the hot summer. So
yeah, and when you're poor establishment and poor conditions, think of it. You have let's say you're sick and you have the flu and you're supposed to go out and run a 5K. Mm-hmm. You just don't have the same energy that you did if you were normally healthy, and that's why if the crop was healthy, it could handle hot, dry for a while. But in this condition, hot and dry for just a little while, it's just going to the crop conditions are going to cave in.
Yeah.
It's really a perfect setup for a very serious situation. The most serious situation since the 2010-11 drought that we saw here and in Russia. It's almost a carbon copy of that, except we think it could be worse this time around.
So speaking of dry weather, Argentina and Brazil is still early. I don't want to be that guy that's the alarmist here, but it's still pretty early. But they've had some timely rains come through Brazil and Argentina in some very dry spots, but not nearly to the effect that they thought they were going to get. Right. So now you start looking at some of these key growing areas in Argentina and some of these key growing areas in Brazil. When it comes to soybeans, there's a lot of dryness out there that they're worried about. So, as you look at South America, what are your thoughts there?
Well, we really got when we get into mid-December, we got to take a look at crop conditions. We got to take a look at how things are going, because that's really where what I would call you start to get irreversible damage to the crop production potential. Up to this point, you get some time in the range. You can still get the crop to be a really good one, but. So I think for the next 30 days, the market will remain concerned, but I don't think you hit the panic button. You don't hit the panic button for weather in November. You hit the panic button in December if this drier pattern persists or it gets worse, or rains are missed in certain key areas. And so this will really be initially an issue for soybeans. Remember, Brazil's second crop corn gets planted in January and February. So that's really the key crop for export, and we really won't obviously have no idea what that's going to look like. But this would be more of a soybean issue could and probably why we're seeing some relative strength in soybeans versus corn right now, because that really is where the weather would be most impactful. In December would be the soybean market if it stays that way. And so, I think it's going to be. I don't think we're looking at top end crops, but I'm not sure Brazil's looking at a disaster either. It could. I'd be more worried about Argentina dryness than I would Brazil right now. And while that's important, it's not as important as if Brazil got into trouble. So it's a mixed bag. But we're just right now. I think it's the grain markets are still about Chinese demand. Is it going to stay strong? Is it going to pull back? And we just saw this week the Chinese came in again for soybeans, and they made a new high. So that's really the driver right now. I think weather is being watched, but I don't think it's a driver yet. But it could become a driver after Thanksgiving. I view after Thanksgiving as the key point to focus on a weather market developing for South American weather.
Yep, and it looks like it's shaping up that way pretty well. I've cotton market's been one I've been kind of watching a little bit, and with the economic turmoil that we're seeing, usually cotton is a pretty good indicator of what we see happening there. But we've seen some pretty big rally ups, and then we've seen some pretty big fall offs. But like yesterday, we had a pretty good rally up, but it finished down 16 points down at about 70 cents. What's your thoughts?
Yeah, I mean, demand's a problem for cotton. It's a very economically sensitive market.
Right.
I mean, we've hit this thing. We have another storm coming for Southeast cotton.
Right.
Another deluge is coming next week.
Yeah.
But the demand is really a problem. And so, I mean, if we had normal demand for cotton, if we had a normal economy, everything was rocking and rolling with the kind of weather we hit this market with, we could have an 80-cent market easy. But we're not, because the demand is just not going to be there. And so, once again, the weather has kept it from falling much, but I don't see the pathway to much higher prices so long as Europe's shutting down again, and and we might shut down again. It's just really tough to say that cotton demand can bring this cotton market higher than 70 cents. Like we've been at. I think it's really going to be tough on the top side to do much more than this right now, and I'd worry about some downside if the economy really starts to weaken further and the stock market starts to get hit. Cotton could go along with it for a little while,
Yeah. So while we're on the topics of economy and stuff that has a direct connection to the economy, crude oil can't help itself, but it seems like it wants to be between that $37 and $40 range. And right now we're looking at crude oil. Right now is $37.58. It's down 1.2. Just can't seem to rebound from that shutdown we had, with the economy, and it's slowly coming back, but it just keeps hitting some pretty big resistance points. So as you look
I drive down here in Florida, right?
Right.
And we're wide open again, and the roads are just nowhere near as busy as they should be.
Right.
People are just driving less. They're doing less stuff. The economy, people are staying home. They're working from home. They're driving less. It's just the demand for gasoline is not there like it should be, and that's a real, it's a weight around the crude oil market's shoulder. And then, of course, you have, the Biden administration that's going to, try to promote moving away from fossil fuels, which means less demand, on the margin. So, yeah, it's a tough one. That market just can't get out of its own way because of worries over demand. And it's the same like for cotton. Demand is just going to struggle here, and a Biden administration isn't going to help. They're not going to help. So.
Right. No, they're not. They're not gonna. They're not gonna help much. When you look at some of the stuff that we see in these outside markets and what we see happening there, again, kind of back to your point when you started off here earlier, they've been on an upward rise for the past since election night basically, and they've been going there. I'm looking at the Dow Jones and the S&P 500 right now, and they're up. The Dow's up 542.5, and S&P's up 67. Nasdaq's up 300. Just across the board, there's everything there. So, what's your reaction to that? And do you think how much of this is built into some maybe future stimulus packages that are going to come out between now and the end of the year, or maybe even after the first of the year?
Yeah, I mean, the market's betting that a big stimulus is coming. They're betting that a big stimulus package is coming. They better be right about that.
They better be.
Because if they're wrong about that, it'll fall as quickly as it went up. And I don't know if a split Congress is going to agree to the kind of stimulus package the market is betting on. I'm not sure. I think there'll be some stimulus, but this what's happened to the market? The market's moved up on big stimulus, not $500 million. I mean, they're looking at $2 to $3 trillion stimulus. I don't know if everyone's going to go along in Congress and agree to that. I'm not sure about that, and so it sets up the possibility of a huge disappointment if we get cut into a quagmire in Congress and they can't agree, and this stimulus is either delayed or it's watered down. I think the market could be over betting on this, and it might be set up for some kind of a retrenchment when the reality kicks in that both sides are probably not going to go along with each other like they haven't got along with each other in a long time. So that's my feeling, and the dollar might strengthen as a result of that. So I'd be very careful about overreading too much in the initial reaction to the elections. We usually do get excitement on an election. That's normal, but there could be a hangover. There could be a hangover here, and I think more has been pumped in than is justified, and I'd be a little careful. Reading too much into this is the way it is, and it's inflation all the way, and this is a guaranteed situation. I don't think we can guarantee anything right now. All we know is we have a split Congress and a divided country, and that means probably less aggressive than more. That would be my feeling about it.
Yeah. So, okay. So the other thing that's tied to the economy and also to the strength of the dollar too also plays heavily into this is gold. Gold has. We've seen a high of, over 2,000, and then it kind of settled back down to 1,700, but now it's back up. Right now I'm looking at gold futures, and they're at 1953.80. So they've had a nice rebound here of late, kind of based on some of the stuff here. So when you look at some of these precious metals and those kind of things, those are a hedge against inflation. So I guess what are your thoughts there?
Quite frankly, gold has struggled when you really think about it. I mean, through it all, it's down from its highs, and it's struggled. Mm-hmm. Even though we've had this apparent wild idea about inflation and the dollar weakening, it's, the precious metals have a way of sensing a little further down the road than maybe the stock market does, and it's not giving a clear inflationary signal that I can see. It's not, and I kind of think that maybe the disappointing performance of the precious metals might be a warning sign that what we just said, that maybe the market is overplaying what's really going to happen here, and maybe the inflationary side of the equation, while it probably will be there in 2021, but maybe not as quick as the market's anticipating. That's what it says to me, Casey, that maybe we're overplaying this short term and we're set up for some profit taking or some money to flow out because too many people got into the same trade maybe earlier than they should have,
Yep, and same with silver. You look at silver and see what's going on there. It's exact. It's almost they parallel each other in the way the graphs look. So, well, good deal. Well, Shawn, hey, good information as usual. If folks want to reach out to you, get some information about what's going on at Hackett Financial and what you can do for them, what's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of interviews and sample reports to read to see if what we do might be of value to your listeners.
Absolutely. So Shawn's on here a lot, and we talk a lot about 21 and 22 and what we see happen with the weather, the La Niñas and grand solar minimums, and how they're going to combine together and collide and cause some pretty big problems here for the world when it comes to long, cold winters. So Shawn did a interview with Real Vision, and when he did that, he was kind enough to let me have that audio. I put the audio out on Moving Iron Podcast number 195. I released it yesterday. So yesterday, for those of you that are listening here in future times, would have been November 5th. And that would be out there already. So if you're listening to this now, go back and listen to Moving Iron Podcast number 195, and that's Shawn's interview with Real Vision and what he kind of lays out there. It's a very good kind of a question and answer type of deal, and it's not necessarily just a presentation. So it's a great amount of information that gets laid out there, and to be honest with you, it's a point of view that's not widely accepted right now, but I can promise you folks, when you listen to that and see what's going on, what Shawn's talking about is happening, and I can be pretty skeptical about stuff sometimes. And when Shawn was talking to me about this to begin with, I was kind of skeptical till he started telling me, giving me some examples of stuff that was going to come, and a lot of that stuff happened. So, Shawn, thanks for letting me put that out there, and like I said, it's a great interview. Also, make sure you check out the Moving Iron LLC website. That is movingironllc.com. That's where you can find the latest information about the Moving Iron Summit coming up in Nashville, Tennessee, January 20th through the 22nd. All the information you'll find out there. Shawn's going to be there. Shawn's going to have a great presentation to kind of go along with what the Moving Iron Podcast number 195 that's out there now to listen. So give that a listen, kind of give you an idea what Shawn's going to be presenting here at the Moving Iron Summit. Going to be some good stuff as well. Make sure you check out the Global Ag Network and the great podcasters out there. Listen to the Dryline Farmer podcast with Brent and Landon. Those guys are pretty funny. They'll make you have something to listen to during the day, and there's a lot of good entertainment there. So with that, I am Casey Seymour with Shawn Hackett. Let's go loose iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.